Okay guys, let's talk Bitcoin. We're going to be taking a look at the price action on the charts. We're going to be taking a look at everything on chain. We're going to be taking a look at what's gone on with the longs, the shorts, where they stand today, and the liquidations over the last 24 hours. As I get into this video, if you find it useful, you know what to do. Hit that like button. I do appreciate that. If you happen to be new to the channel, make sure you're subscribed to stay up to date with all the live streams and videos that we do here at Cheeky Crypto. Okay guys, so let's get right down into it. We're going to start things off by taking a look at the liquidations for crypto. Okay, so it was yesterday that we were saying that it looked like things were about to double in the sense of the liquidation. So we were hovering around the $149 million yesterday, and today we're up here at $359 million. So just over double the amount of liquidations. And this was because of several different things on the charts. We were up in the fifth wave highs. We obviously saw data from the on-chain metrics not quite stacking up. And well, yeah, we are here where we're now, right? We had a lot of moon boys saying that, everything was going to break to the upside. And then you have people like me and a few others in the space that are basically telling you that that isn't going to happen, and that's not really kind of accurate or anything like that. Unfortunately, there are a series of people who don't necessarily understand what's going on in the charts from a psychology point of view, don't really pay attention to the on-chain metrics, don't really understand how this shit works. And unfortunately, people have been led down the wrong path. And as a result of that, $359 million has now been lost, right? Now we can see for the majority of that comes from Bitcoin at 136 million. We can see that Ethereum is 126 million. It's pretty much those two assets, right? And as we come down here, we can see that it's pretty much been the long positions that have been liquidated. Now on Bitfinex, somehow, I'm not quite certain how, I mean, the numbers are really small, but I mean, they had the short positions that got liquidated. I'm not sure how that happened. I mean, maybe they had a really tight stop losses, but anyway, Bitfinex, apparently $974,000 worth of short positions got liquidated yesterday. I'm still racking my head around how that happened, but nonetheless, it is what it is. Everything else is, basically long positions, people going long because the moon boys are saying that we're about to break to the upside, and I saw several videos that unfortunately I can't erase from my brain that were saying, we're going to break to the upside, and it was based on really, really, really bad stuff. Anyway, nonetheless, we are where we are. We have OKX topping the charts here at $112 million worth of long positions being liquidated. Binance takes second place at 69.67 million, and then FTX down there at 36 million. So, for all that it is worth, OKX and Binance are the majority of these. And you can argue that maybe FTX and Bybit add up to a sizable chunk at about $58 million worth of liquidations as well. But for the most part, it's interesting. But where do we sit today? Where are those positions currently sitting? How is the sentiment, etc.? So we're going to take a look at the longs and the shorts, right? And here we can see that we have about 49% people going long, 50.85% going short. But this is as of 1 o'clock in the morning yesterday. So this is a lagging indicator. Now, if I take this down and just throw it into the last 4 hours, we can kind of see that actually within 1 o'clock this morning, we have this actually a lot more in favor of the short positions at 51%. So we know that that's interesting. Now, of course, we break it down to the hour and we can see the different platforms here, and we can kind of get an idea as to where people are kind of feeling. Right now, actually, the majority in the last hour are kind of swinging up more towards the long positions than the short positions, which is interesting in itself. And we'll go through why that is in a moment. Essentially, if you have a look here, we've got bearishness on on Binance, OKX is slightly bearish. BitGet is actually reasonable with long positions at 51.6. FTX is feeling bearish. We've got CoinX bearish. Deribit 51% in the longs, so reasonable. But the most bullishness comes from Kraken here at 57, and only 42% of that is actually short position. So for the most part, it's reasonably split depending on the platforms that are kind of out there. And for the most part, everyone's feeling a little bit more bearish right now, and that might not necessarily be the wisest decision. And I'll go through why I think that in a second. So let's go ahead and bring up our on-chain metrics. So I'm going to try to rattle through this as fast as I can. So basically, up here we've seen this little candle. It's not candle. this little bar right here, that's an important one. We're going to get to that in a second. Inflows, outflows, right? 8.51 million going onto exchanges, 8.77 million coming off of exchanges. This is from January the 1st, 2022 through to yesterday. You can see that the balance of Bitcoin on exchanges has been steadily increasing recently. This isn't unusual, but again, it's an interesting kind of tell. Pretty much from down here at the end of August, we've seen nothing but BTC get loaded up onto exchanges more than it has been taken off of exchanges, and that is really counter to what those moon boys and its various different influences across TikTok and Twitter and all that kind of stuff basically telling you, right? They're not telling you these things. These are important tells that you should be aware of. Regardless of what those indicators might be telling you on chart, the on-chain metrics are also vitally important. Coming down here, we have the hodl waves. These are an indication as to whether or not long-term holders are getting shaken out of the space. And I did see some questions around the 10 years or more. Now, yes, this is a mixture. Okay, there are going to be people who have held Bitcoin and still have access to Bitcoin for more than 10 years. However, the majority of this bucket is actually Bitcoin that is just lost. It's lost because it was insignificant way back in the day, and it's like dust, or was like dust, and now it's actually valuable dust, but people probably don't have the keys to access it. And again, then there's people who bought it, maybe unfortunately have passed on, are no longer around, and have no access, and their family members have no access to the keys, to the wallet, and all that kind of stuff. So arguably, if it's been static for this long, we kind of assume, rightly or wrongly, that it's just never going to be accessed. Obviously, some of it will, but for the most part, this number only ever seems to grow, doesn't actually come down. So 13.14, okay, so 13.14% of the circulating supply is arguably lost Bitcoin. 7 to 10 years, no change, 6.38. 5 to 7 years, actually slightly increases, goes from 5.21 to 5.22. The 3 to 5 years has a slight decrease. That's because it moves up, so it goes from 14.26 to 14.24. On the 2 to 3 years, we see a slight increase, going from 6.18 to 6.20. And we see a slight decrease then on the 1 to 2 year holders, going from 20.62 to 20.55. Everything else down here is really insignificant in my opinion, but we do see a slight increase in activity day on day, going from 1.1 to 1.61% of movement within Bitcoin supply. Okay, so we know that longer term holders have remained longer term holders, but there's definitely a lot of volatility down the lower end of the brackets in terms of how long it's been static for. And we've seen a slight increase in activity. Let's get back to this then, right? So we kind of skipped over this, but this little kind of bar right here is telling you exactly the concerns that we've been talking about for a while. This graph, it doesn't really matter so much what the number is. It shows you a graphical representation of the net difference between inflows and outflows. So what's the difference between inflows? What's the difference between the outflows, right? So basically, let's say you have 100,000 going onto exchanges and 90,000 coming off of exchanges. There's a positive 10,000 Bitcoin on the exchange. That's essentially what this number does. What this does, though, is it wraps that up into a 30-day average, which means every bar is a 30-day average of how Bitcoin has been kind of, moving on and off the exchanges. And as a result of that, this actually showing you positive over a 30-day average is a bit of a concern, right? It means that actually, as the number is 15,000, which doesn't really matter too much, but basically is telling us that actually as an average over the last 30 days, more BTC has ended up on the exchanges, right? And that's that's counter, if I can get my words out, that is counter to the narrative that the Moon Boys have been shilling to everyone, that we are going to the upside, because actually you would see it being accumulated at lower end coming off the exchanges. In order for that price to move up, there has to be a shrinkage of the supply, not an expansion of the supply. So understand those things, they're very important. Let's move on though. Let's talk about this. This is one of the most important graphs and charts that we have when it comes to BTC. You can't just look at one of these lines without looking at the other. I talk about this all the time. Basically, these are your inflows and your outflows. This is Bitcoin going onto the exchanges and Bitcoin coming off of the exchanges. Each data point on here is 1 day, and basically it shows us that we have Bitcoin leaving or coming onto the exchanges over time. I like to think of this as our demand and our supply, the red line being the supply and the green line being the demand. Okay, and everything when it comes to price discovery or price movement or price appreciation, however you want to articulate it, comes down to the supply and the demand. This is a basic thing that we all intrinsically know. Just take a look at things around you in the grocery stores or the petrol stations or the gasoline stations, I don't know what you call it over in the States. And essentially what you've got is, as the supply drops down, the prices go up, right? Because if demand also comes in when the supply comes down lower, and you see a run on, let's say, gas, for example, you're going to see the price rise, because basically if you're willing to pay more for it, then you'll be the one who gets it. Again, very similar kind of scenario, if you will, to how the Ethereum gas prices work. It's a bidding system. The who pays most will get their transaction completed faster, right? And think of it in the same way, supply and demand. Basically, if the supply goes up and the demand remains low, well, the price can drop because there's more people trying to sell, and they'll sell it undercutting each other. And of course, as the as the demand goes up and the supply goes down, well, actually, all of a sudden, everyone can start selling and charging more expensive prices for it because the demand is there to swallow it up. So supply and demand, absolutely everything when it comes to price movement in the space. And this graph shows you that. Basically, it shows you the Bitcoin coming onto exchanges ready to be sold, and we shows you the demand of people trying to buy Bitcoin and take it off of the exchanges. And in the case of yesterday, what do we see? 87,000 BTC going onto exchanges, 69,000 Bitcoin coming off of exchanges. This shows us that the supply is outpacing the demand, and that is intrinsic of a bear market. The definition of a bear market, in fact, is when supply outpaces the demand. So this is a very important graph. We talk about this every day. So yeah, it's one of those. Let's move on to the next one that I do like, of course, which is our wallets. Okay, here we have 3 wallets over 90 days. Each one of these graphs represents 90 days at different wallet sizes for BTC. And of course, we've got the shrimps, more power to them, although they have fluctuated over here frustratingly a little bit. They've lost a few shrimps, I think, to the cause, going from 192,000 wallets to 191,000 wallets. So very unfortunate, a few shrimps have been shaken out of the space. More power to the shrimp, I would say. But let's take a look at these guys, right? So obviously the shrimps are your retail investors, your one Bitcoiners. The dolphins are the same, but they just operate at a higher financial level. So we call them high net worth individuals, but still act emotionally just like retail investors. And as you can see, over the last little while, the price pushes up, these guys pull back down. Now, there is a lag in the price movements and the wallet counts for these guys. Basically, I've pulled the price points or the prices from CoinGecko. It's a USD value, and I'm guessing it's an aggregated median, basically like an average price of the day, because it doesn't really give us the right representation of price as to what we knew it to be yesterday and as to what it is telling me that it was yesterday. So I'm assuming it's an average price that's going to change a little bit. The wallets, of course, are as per midnight, so that's what they are. So interestingly enough, we obviously see a slight fluctuation yesterday with the wallets coming down for dolphins, kind of getting shaken out of the space at a fraction there. But for the most part, they were buying the pump, buying the dump. I don't think it really is going to affect these guys too much as long as they don't get shaken out of the space. Here we can see that the price action and the wallets for the sharks are starting to marry back up again after deviating away. I'm still keeping a close eye on these guys. I used to think of these as the traders of the space, following the price action aggressively and all that kind of stuff. They deviated away incorrectly, accumulated the drop here, and actually things didn't work out that well. So we're keeping a close eye to see what they do next. Over here we have the whales. The whales are the strategic players. They basically sell into pumps and buy into dumps. And obviously, as you can see here, as that price recently moved up, they came out of their positions, right? They sold into that pump, and you're about to probably see this line move up a little bit as that price pulled back yesterday, right? There's always a buyer, there's always a seller. Think about where the Bitcoin is coming from. It's not necessarily coming directly from the exchange that is selling BTC. It is usually coming from a different participant. There's always a buyer, there's always a seller. And in the case of the massive amounts of Bitcoin that's been available for sale recently, for all of you guys to be, I say all of you guys, that's really bad. I mean, for the retail investors to be accumulating those shrimps, those one Bitcoiners, for example, it had to come from somewhere, right? Where did it come from? Well, it came from the whales. And they operate very much like this. Basically, this is 2017, 2018. You can see the all-time high in 2017. The orange line is the price action of BTC. The black line are the whale wallets. They sell into the pump to the upside, and they buy into the dump down the other side, right? That's important because we aren't seeing that aggressive accumulation with these guys yet. So until that happens, the Bitcoin bottom just isn't simply anywhere near us. And essentially, they buy before the bottom. So if they haven't been buying, then you could argue the bottom isn't in, right? That's kind of where I stand on that. So essentially, we follow the money. We do as they do, not as they say. Lots of reasons as to why they've been selling their positions. So, Elon Musk sold his Tesla stock because he might need the money for the Twitter lawsuit. He sold his Bitcoin because he might need to increase his cash flow for China. It's always, I might need this and I might need that. But actually, what did they do? They sold on the back of retail investors and locked in their positions and their gains before any potential pull to the downside. And you can acknowledge that, you can understand that, you can accept that, you could ignore it and pretend it doesn't happen, it doesn't exist, and stop picking on Elon Musk or whatever. Essentially, those are the facts of the matter. Those positions were sold, those were the reasons he gave us, and the price fell down afterwards. You can put 2 and 2 together, I'm sure, and come up with 5. That being said, ultimately what we can see from these wallets is a continuation to de-risk from that whale-sized wallet. Basically, they are not looking to accumulate, okay? So when we have all these things, it's very important that we understand and kind of put into place better practices personally, right? When I take a look at the space, I think, okay, well, what are these guys doing? These guys, they historically, and for the most part, are in positions of significant wealth, being billionaires or multimillionaires, that they genuinely aren't going to put themselves into risky situations. So actually, is it better to kind of follow what they tend to do than it is to not, and to kind of, maybe just listen to some guy on YouTube telling us that the price is going up, right? Because of a trend line that makes perfect sense. So, I think essentially we have to be cautious, but I tend to follow the money. I do as they do, not as they say. So they might tell me one thing but doing something totally different. I'm paying attention to what they're doing, not what they are saying, and at the moment they are de-risking, and therefore maybe we should be thinking about de-risking, right? Maybe the bottom is in, maybe the bottom is not in. We've spoken about that a dozen times. I'm not going to talk about that again today. Let's talk now, though, about the price action of BTC. A lot of things to get through, not a lot of time. So Bitcoin paired up with USDT on the hourly chart. Binance is the data source, right? Now, we obviously saw this very significant pull to the downside. We were talking a lot yesterday about this contraction right in here with the Bollinger Bands. This is basically an indication that a volatile movement is about to come, right? We kind of we're talking about this quite a bit, and I talk about this in Discord a fair amount as well. Basically a contraction, right? A contraction doesn't tell us what direction it's going to break to, but it tells us that the contractions, just in here, for example, and over here, we are going to see a volatile movement. In this case of this one, it was to the upside, and in the case of this one, it's to the downside. Over here, it was to the upside. Over here, it was to the upside, right? So contractions with the Bollinger Bands, they tell us that a volatile movement is about to happen. Now, with that being said, we are narrowing our Bollinger Bands quite nicely now, so just kind of keep a close eye on that. But basically, this is also happening at the top of a fifth wave. Okay, so as I was saying yesterday, I didn't really know which direction the things were going to go. So when I was streaming, our stochastic RSI was oversold. We were somewhere around here, and it was possible to go up from our stochastic RSI, and it did. It did take the price a little bit higher. Maybe that's why some of those short positions got liquidated, right? We went up a little bit higher here, and we became overbought. Not only did we have the contraction within the Bollinger Band, not only did we have the fifth wave high, but we were also overbought on our stochastic RSI as those CPI numbers came in. And that resulted in this massive move to the downside. And I say massive, it's not huge, but it's significant. Okay, and obviously liquidated a lot of people on that route to the downside because they were going long, thinking, that they're going to the moon or whatever. But essentially, that's kind of what we're talking about now. Yesterday on the stream, I was saying, didn't know which direction it was going to go, but Elliott Wave Theory was saying down. And Elliott Wave Theory, once again, has kind of proved us right with this kind of regard. Down it's gone. Okay, so the price action fell down. Now, looking at this structure, or lack of structure, we should consider what this might mean. There isn't really a decent pattern to this at the moment, okay? So we should be thinking, are we going to get 3 waves in here? And if we do get 3 waves, where do they go? And all that kind of good stuff. Now, I'm looking for 3 waves because we've got 5 waves going up, okay? And that's kind of what my expectation would be, and as we were talking about yesterday. Now, if this is just an A wave and that's a B wave, we could come and revisit down here and maybe get a lower low, or lower than this area. That would actually invalidate any kind of zigzag structural move to the upside and would be a concern. We could, of course, maybe bounce up a little bit further and then start to pull back down and have something like that. That's okay. We could do that and then have another 5 waves up. Okay, so volatility within this range, and that would complete our little zigzag pattern that we need. Okay, that's always possible. Or because crypto just does, have extreme volatility and it doesn't necessarily follow our expectations, maybe we just break down from here. Maybe we do end up going and completing our macro zigzag, right? Which is over this side, which is 5 down, 5 up, which is unusual. We wouldn't expect it, but no, I'm not saying that might be something going on here that I haven't seen. But it's possible that maybe this is just going to be our start of our position to take us down into this next move, into new lower lows, and head towards that $16,000, right? That's also possible. Okay, so there's a lot of things we should be cautious with. And I do want to kind of now spend a little bit of time, but a brief moment just to say that sometimes the best trade is no trade, right? When the market is in extreme states of volatility, yes, it's lucrative if you're on the right side of it. And if you're not on the right side of it, it can be incredibly dangerous, right? Specifically if we're using things like leverage, right? So I think essentially, sometimes it's better to get confirmation of moves. Trade when you actually have the right direction behind you, right? When you know what's going on, rather than just picking a 50-50 and running that risk of maybe getting it wrong. Essentially, we've seen a lot of people, unfortunately, end quite badly, right? We can see that the liquidations are up there at $355 million, right? And that's a lot of money that's been lost, right? And it tends to gravitate towards the whales and kind of the people who are kind of, on the right side of the battle. So just kind of be really cautious with it. Sometimes the best trade is no trade, and if you have no stop loss, then you probably shouldn't be trading at all, essentially, and use proper risk management. If you want to know more about these kind of things, join us down in Discord. Link is in the description down below, and we'll help you try to navigate this in a much safer way. Okay, but essentially this move to the downside doesn't necessarily mean that it is over. We haven't seen 3 waves. We have at best 1 wave at the moment, and this could be something that could change into multiple different structures, as I was talking about in our Discord server yesterday. Basically, this could be many different things, right? We could have this as, let's say, a simple kind of A, B, C structure. That's possible. We could have a look at this as a wave 1, 2, 3, 4, 5 structure. Okay. We could look at this maybe even as a W, X, Y, X, Z structure. Okay, this doesn't tell us yet. Okay, so it's a bit too soon, right? We know that the move is likely to be down. At the same time, though, we could also say that maybe, just maybe, there's something like this going on in here, and we just can't see it on this hourly chart, right? So we need to be cautious. We can't just, jump on in. And I know a lot of people who were feeling bullish have been kind of really hit hard, but I still think there's going to be another move to the upside. And that move to the upside, I think, is going to be, again, trapping a lot of the bears out, right? I think it goes both ways. Essentially, this market in an unregulated way is quite dangerous and quite difficult to kind of navigate, but we could also be just looking at doing something like this, just kind of finishing off a zigzag pattern, taking us back up into our expected yellow zone, as we've kind of been talking about for quite some time, right? But essentially, we have gone in here. We've kind of hit our expectations of our wave 2 or wave B, from our 5-wave drop. Okay, this is where we wanted it to be, somewhere up here. The structure and getting there I don't like. So my expectation would be that this should be a zigzag, so A, B, and then finally C, like this, and we would end up towards that kind of $23,000-$24,000 range. And you can call that a fake pump if you want. You can call it whatever you want, doesn't really matter. But essentially, I don't think we're going to go higher than 25,211 if that is the case, because that's going to be our origin level of our macro 5th wave structure over here on the left-hand side. So for the most part, that's kind of where Bitcoin sits, right? I'm expecting that move to the upside, but also if we come down lower than 18,510, then that invalidates that potential move altogether, and we wouldn't expect to see it. And we've just got this 5-wave structure here that I must have marked up incorrectly, and we must have a zigzag already in here, and I would have to dissect that further to see where I went wrong. But essentially, that's where I sit with this at the moment. This could be the start of the next big drop to the downside. Okay, and from our stochastic RSI on the hourly, that looks right, but on the 4-hourly, not so much, right? We're oversold. On the 8-hourly, we're oversold, right? The daily, yeah, we still have to drop down. The weekly, we still have to drop down. So the macro still stands there that we need to come down lower. But the 4 and 8 hour, they actually say that we might end up going up a little bit further, right? So, we'll be keeping a close eye on it. This is why I was saying those short positions that are opening up right down here, right? People are feeling a bit more on the bearish side. Well, that might not necessarily be the right idea, because we might actually end up moving this up and those people will also get liquidated. So real caution to the wind here needs to be played. Say caution to the wind, that's a really bad phrase, isn't it? We should be cautious, right? We shouldn't just throw caution to the wind. That's the right way of saying it. And essentially we should be, really careful over what happens next. This is basically gearing us up to trap bears. And when we do move up, we're going to be trapping the bulls. And then essentially there's going to be a big breakdown, I believe, and taking us down into new lower lows. And that's going to shock so many people. So be very, very cautious, right? Trading during these kind of moments of volatility is great. Just make sure you're on the right side of it. So if we are to use leverage, use proper risk management with it. Make sure you always have a stop loss, all of those kind of things. And I think you'll be able to gravitate this or navigate this space properly, right? And under correct kind of risk management is always a good idea. Now, it's also worth noting I'm not a financial advisor. I can't give you financial advice. All I can do is give you thoughts on the data as I see it, both on-chain metric data, liquidations, the longs, the shorts, the in-chart data. It's just my thoughts and opinions on what I think is going on. So it's important that you do your own research, come to your own conclusions, and do not just blindly follow anybody in the kind of influencer space across any of those social media platforms. And that goes for myself, that goes for Chris as well. Basically make sure that you are looking after yourself, right? Because I don't think there's many people that are going to look out for you. So really make sure you look out for yourselves. Guys, I'm going to leave this right there. If you have found it useful and informative, you know what to do. Hit the like button. If you are new to the channel, make sure you subscribe and join us down in Discord. There's a lot of really cool, fantastic things happening down in the Discord server, so why not go ahead and check it out, guys? Until the next one, have a fantastic day.